comes the opening of the markets in a few hours. So I'm doing the pre-market open analysis. I might be placing pending limits, and I'm gonna try to open this demo account again. You know, it's too much fun pressing buttons when you when you build a Frankenstein thing. You know, there's nothing like having it going out and killing little children. So that's been a problem too. So the dollar yen is, I guess, for all intents and purposes, in an uptrend. Always the question is going to be is, well, how long does that last? And the only good thing about the dollar yen right now is it's in a triangle, so it's easier to trade a triangle than it is to trade a range. If you're, I guess, if you're a limit order and stop, if you're a stop order trader, it's a problem for ranges. But triangles, you know, you can kind of set it and forget it from a breakout standpoint because you can take less risk. But it's always funny to see how they chop the hell out of these breakout traders as you exit the triangle. You know, in a perfect world, you get out of town without, you know, having to refill your car because you're trying to escape something. I just watched like a whole weekend of car chases, and I'm always thinking, wow, you know, before you do this, you really want to buy an extra big gas tank so you can just keep outrunning the police for next. Police chase that goes on for like 5 days because the guy really stocked up on fuel. This breakout on near the end of Friday, we pulled back and to find support here. A couple times ricochet off this thing up here. And, 1 hour chart I think is kind of safe. I don't think it's slicing it too thin. And, you know, if this was a 15-minute chart, I'd definitely thinking, oh, you know, the whole time it's tanking, I'm like, man, I'm just ready to, I got buy stop stacking up here. You could add buy stop stacking up here and it got filled here. And unfortunately, you have to have a sell stop here. And maybe you have a robot that tightens it up for you, but you don't make a whole lot of money on that. You know, the alternative is to, as the market's tanking, be throwing spike strips out here that last 15 minutes, a half an hour. And I do think that is a viable answer to, if you've missed the move, or you had sell stop stacking up in this triangle. So if you can just look at this as being a triangle, or at least a retest of that and a trap for the breakout, guys, never got trapped on that. So when the volatility evaporates here, just in a sheer, I have a 100 pip grid on here, so just looking at, you have to kind of estimate, I guess, if that's 100 pips, maybe this is, 18 pips or something. But as it's coming up here and drifting up, you're probably in about a 15 pip range here on the 1 hour. So if you are pressing the sell stop button, and yeah, you make pretty good money there. Plus, it never really stopped you out. And you can just see, well, they're probably going after these people's stops. So I think tactically, if you're not along for the short train ride here, like you didn't get in here and you missed out, instead of chasing it, I would say run buy stops for when it finishes. But at the same time, you got some hand-placed orders here. I don't know if you could program to have them jump out precisely at this place, but you definitely want to buy limits here and here. So you're going to get all these fractal. It's like a bare fractal trap. If you consider the fact that you don't really have to put Williams up here. In fact, Williams would probably not give you this fractal, which I couldn't understand either when I asked him, well, what about this? What about that? And he sloughed it off and he went to his Cray computer or some nonsense. This is one of his fractals supposedly, but these are all your buys. So you're buying here, you're buying here as it's plunging. And of course, people are going to say, you're getting killed on that trade. I know, but I got another order to buy here. I know, but I got another order to buy here. I know. And you have a stop back here, right? So even on this final smash down, you're getting your ass kicked on this order that's getting filled, but maybe you do have an order here that you're kind of disappointed they didn't take it all the way to here. And you know this drama happens all the time. Like, say you had sell stops stacking up here. Of course, you had to take a lot of risk. You maybe not want to have sell stops during this much volatility because this rip back could just be nothing but a, rip back up. And better to wait for a quiet session. So right now you're coming into the opening, and you can see the fractal stop stacking up here. So all the uh, all the bears have their protections in here, and the bulls want to jump on and take their order from them. So I'm thinking, well, I want to put buy limits down here tonight on the open, just below the 100 round handle for my exit being here. Take profit here, but low risk, right? Tight stop to make this. Maybe there's a stop here to make this. Maybe you have to just settle for this wick being your exit. So if you are going to buy here tonight, and this is 100 and it's about 70 pips deep. You have buy limits here coming into the dollar yen open in Asian session. Now, I would let those orders last, I suppose, about 8 hours. I mean, if this is an hourly chart, count how many bars you got here and how many pips per hour did you make. Well, of course, you really made a lot of pips per hour these last 3 hours as you crush into here. And the idea that this is kind of a mental trap is that if you, in your mind's eye, you know what the weekly looks like and the daily and all the 4 hours and all this stuff, and your monthly, you're like, damn, this is it. This is when this thing's going to crack. I'm staying in this trade. I don't think you can think like that if you're getting on these 1 hour setups. 1 hour setup not only tells you where to get in, it tells you where to get the hell out. Because you're going to have plenty of chances to get back on this train. If it's really going, if the dollar yen is really going up to 3,000 pips in the next 3 years, yeah, maybe you lock in one position here, but it doesn't make any sense because there's so many, you would just trade it from the long side because you want to go flat in some regards here, right? I mean, who wants to be long, at least long for that long? Because you're exposing yourself the whole time your account's open. I mean, what if there's an earthquake in Japan? I mean, you just cannot. The idea that you're going to look at the past history of any chart and think, oh yeah, but look at some of these spikes recently, depegging of the Swiss franc. These are recent, this is, the market's purely over the counter, so there's no, anything can happen. So, I mean, why expose yourself? And I don't know. I think that's the, people backtest some robot. I'm like, yeah, but could you psychologically endure being in the market for 2.5 years and you made only 500 pips and you didn't get on that spike when, remember, it was up remember when you were up like 3,000 pips, but you held in there because, it's a trend trade. I mean, that's the whole problem. So, yeah, I'm not going to sit there and expose myself for, to me, this move here in 4 hours. Are you kidding me? If you had a pending buy limit here and you just made 100 pips in 6 hours, you got to get the hell out of this trade. They're going to trap you up here. Obviously, you have sell limits beyond this wick because this is a market maker's market. And what do? Take it all the way back. Where do they take it to? This top. So you're constantly like, you know what? Oh boy. It's almost like it's not risk on, risk off. It's like vacuum on, vacuum off. It's like we're sucking you up, we're sucking you down. You have to think in terms of that because otherwise, if you can't see how they're treating most people, think about a trend trader's mindset. And if you're not a trend trader, you'll know why. Because when you see this, you'll say to yourself, I remember when I was a trend trader. Is this the trend? Yeah, but it's so short-lived. In fact, there's a wonderful channel there that just makes so much sense, breaks out. But guess what? At some point, this is going to be a head. This is going to be a shoulder. This is going to be the vacuum that needs filling. This is going to be the vacuum that needs filling. So the next vacuum is coming into tonight. If you're getting in on stops, a little late, but hey, you know, your targets have to be certainly the retest of the high and beyond. So maybe go to 122 on this thing. But it's not going to go a straight line. They're probably going to do the same thing they always do here. Grab them, rip them back to here, fair value, enter. So if you're going to get in tonight, I would say put buy limits here. And if you don't get filled on those, put some buy stops up. If you don't get filled on those, and then just don't over risk anything. And of course, if you see them, maybe nothing's happening. You know what? I'm going to put a buy limit here. So as this thing comes to a conclusion, this triangle, and you may make money on that first breakout, and they're going to trap these guys, rip it back. They'll play ball with it down here, and then it's going up. So even though you're only trading one instrument, and you really are in the long term looking for it to go up, think about all the money you can make in this trap zone. So this big vacuum is still sitting waiting to be dipped into, because all the bulls here were totally, and I can tell you people were just completely loving, you know, all the bulls, they said, this is the breakout, I got in here, man, I made you just like you said. And or you got in here, you got in this fractal on this triangle. You can get it, so you really do want to be long before, right at the apex. So we're at apex right now. You want to be long because you want to be taking profits as they're coming up in here, because you know the rip back's coming. And if you just let the market come to you, you may not get filled in these orders. So if you're more aggressive and you're waiting every hour looking for pullbacks, like your 1 hour pullback here was amazing, but you didn't have to be there. You could have, after this, you could have put an order here that took an hour and a half to get filled, or 2 hours. So you're looking for fills that happen in the next, and they're just like, you put a scalp bank down here. That's all there is to it. And this is just a completely different strategy where you're getting in at the fulcrum being this top. You have a buy limit here with a stop to take a profit. As long as your ratios are golden, then you have this as your big exit, and maybe this, and you're getting in this vault here, this 100 pip vault. This is the 100 pip handles, and this is 100 pips a day. This thing, if you time price square this, you know, here's 100 pips a day. So that's what that looks like, and we're kind of coming down at like that angle. And, you know, a symmetrical triangle, if you play it right, and of course you probably see, if you're going to trade the yen, you're going to see the yen from all these different aspects on the called the yen crosses, whatever they call them, and instruments. Here's the euro to the yen. The yen to the yen looks like, you know, they've trapped these bears, you know. So maybe here it's like put a buy limit here. But this is 100 pips, and this is a really brutal spread, I'm sure, on this currency. Coming into the, that's the weekly, sorry. Looks like a good trade. Yeah, here's the spread. But here it would be like, same story, different currency pair. So once you get used to looking for the bottom, the top inside the bottom, which is, if this is the bottom, this is the top inside. So you always want to get in when they come back to this doji. You want to have a buy limit there on the dojis. Here, when they trap the bulls, you have sell limits up in here, and they're pretty tight. Actually, kind of a scary trade as they fill you on these sell limits, but tell me that doesn't pay the rent. If you had one up here at this doji, you never got filled, right? You just kind of, this one here, this doji, actually, I guess you got filled on that doji too. So a doji limit, hand placed, of course you can't program this stuff in, unfortunately, but you can write scripts that are tight. And here is the classic low risk breakout. Even the non-directional people, I mean, how can you miss this stuff here, right? Uh, yeah, you could trade. Of course, I don't know. Yeah, I guess so. Sure, why not? Just 22 currency pairs, you might have to um, pick the best setups, right? Best on the 4 hour chart. So that's what I would say is swing trader or just scalping. Okay, I said this whole thing the weekly. Um, so it's kind of obvious here the euro's killing and the pound's about to kill on the weeklies. Actually, here, see how that weekly CAD looks. But the thing is, what's really going on here on the dailies? And I mean, this is, I hate to go back in history and look at the killer patterns here because I just feel brokenhearted about not taking this top became a bottom on the weekly and this triple top and the fourth top failure and then that becomes the pivot that actually there's but just in terms of vacuum, you know, speaking of vacuums filling, you know, this was certainly the big void filling up this whole time. You know, you got to figure the Bears got their stops in and their targets are way down here, and they're like, woo, we're just gonna. But yeah, this is the weeklies, so you got this big pivot here where you had the before this whole thing started, and wouldn't you know it, they take it all the way back to the starting gate. So time and time again, the revisit of the apex of a triangle, which is nothing more than a doji on the monthly here, I'm sure. It's like a big juicy doji sitting here around the yearly. Of course, you can't do yearly on MetaTrader, thank God. You know, it probably looks so beautifully, painfully obvious. You just think, why didn't I take that trade? Like, what was I thinking? The bottom became a top. But yeah, this is like, forget about it. Sell limits up here, obviously. Anything beyond that, and you're just going to have to white knuckle trade that. But it's going to be a killer. Look at this trade here. Come on, you kidding me? This is literally when they came up and grabbed this Williams fractal guy's stop. Holy McGee's, what is that? Like 1,000 pips? I don't even know. Um, yeah, pending orders placements on that. But I mean, I guess you could set that up for the whole week and walk away, see what happens. It's certainly like setting a big trap. But you're definitely going to get into limits on the bear traps. You're going to trade counter to the mob on these things. So as they're going to trap a bear here, right? You can see that the stop entry guys on the weeklies, and that's of course that's why the banks need bailing out because they're probably getting in on these things. Well, it's going down, it's making lower lows. I'm like, yeah, but how do you explain to your boss that you got in here short and you put 800 pip stop in because you're a trend trader and they came up and they hit your stop and then they went down. I mean, it's just so funny to think that people think that the banks know what they're doing. Oh, I got, you know, come on, are you serious? Maybe they are taking the proper entries on here, but I mean, if you're running these rules that people tell you to run and you take them up to a higher time frame, you're getting killed because you have to see what the market makers are doing to your account and why you're getting stopped out and why you're frustrated and why you can't see the forest for the trees. And when you drill down and just slice this down to closing prices only, you can just see these tops become bottoms. Now, you'd say, well, that's just too simple, and it's just wrong. And when the market goes into a highly accelerated mode, the top bottoms and of course you can see that there's just a big void forming here. At some point that has to fill. And so where's the final capitulation point? Is when they take out the last guy's stop, he's like, they'll never get my stop. Damn, oof. Now, he's a position trader. He's long on the monthly. I mean, there's got to be a guy that's just holding this thing. I know people that do this. They take money out of their accounts, a stock market, like they're in the market for the dividend, but when things get tight, they start to unravel that account. Well, yeah, there's going to be I mean, the stock market is just going to, people are going to have to live off their accounts. I mean, unless the economy, of course, you got to get these gridlock people. I mean, the capitalists, they have a lock on capitalism now because they found out that it's too good to be true. Some things are too good to be true. Another freedom is, they always say, you know, it's okay until you cross a line. So they're trying to move the line. They're trying to anticipate what people will do based on previous history, just like a stupid market analyst is going to look at the market and go, well, look at what it did. And I saw a guy doing an analog to the market. I'm like, okay, that's entertaining intellectually, but you could never, you don't want to go into the market with so much bias in your brain that you're like, yeah, it's going up and I keep low. Yeah, you'll be right in the long run until you run out of money. And, it's like the market's got more movement than you've got money in your account, the old saw. But yeah, the dollar yen, um, or the yen in general is going to be the big, what's the story here? So on the 4 hour here, if you wanted to spread your risk, you're going to put buy limits down here on this pair, right? Double top, you didn't get filled. All right, well, it's a pretty bad spread here, I think. I can see it if I can see the spread on the 4 hour chart, well, it looks like it's about 30 pip spread right here on close. Of course, these are the high drama. These are the markets that look beautiful because the spread's so big. Yeah, I'm sure that's the attraction, is the spread. You look at these markets, they're very dramatic, and your indicators really do sometimes give great signals on maybe bigger time frames and stuff like that. But all patterns of this, these strategies hold up through every time frame. Like here is the obvious triple bottom. Becomes a top later on the next week. So that's an obvious entry. And even your moving averages might even be telling you it's going down. But you have a trend line here. So here's your triangle. And these wedges, triangles, and here's a doji entry. Buy limits here. So that was your tag and bag. And I suppose if we ran all your currencies against the yen, so if you had everything against the yen's on the right side of your thing, you got all those panels, you're looking for the best entry of that currency pair. Maybe just have a broker donated to that currency pair. And that's another way to look at it, is to, in other words, whichever one fills you and whichever one doesn't, oh well. But I was trying to trade 7 pairs on Friday, and I was making money, but it was basically selling the dollar. But the problem is that the pound wasn't really. The pound's still trapped in an accumulation or distribution phase, so it really wasn't doing the beautiful runs that the euro and the Australian and the New Zealand were doing, which was kind of I had to take off the biggest winner manually, which I didn't really want to do. I wanted to trade them in unity and just wait for the completion of the wave. But when you're looking at the 15-minute chart, one market's climaxing, the other one's drifting sideways, and then the other one picks up the ball, and it's the attack on the dollar. You watch the money move around the circle, and so that's a situation where you want to maximize your time in the market and your margin. Just get the hell out, hit your targets, and get in on the other strategy you got running, or the retrace, or the breakout system you've got running. And it's always about, well, how much do you want to trade? How many instruments are you going to trade on that one account? So certainly from a standpoint, it's more work to open another broker account, but that way you just donate your strategy to that, and you're running it in that situation. Of course, it doesn't. The euro to the yen and the pound to the yen look like the same pattern there. So I don't know if there's any. Here it looks like, they trapped the on the weekly. They've trapped the. Of course, this is a triangle breakout. Another. It seems like the yen does that to the other currencies too. So here's your top, became bottom for that move. Here's the stop hunt. They got to come back and grab before they go out of this triangle. Or you got to buy stops here, and then here was the retest of the apex of this triangle. Now, sure, maybe scalp it to here, get the hell out. That trade's over, because we still have to go through another phase. There's no triangle here. Maybe it is over for the pound, because when we get up into this if that becomes the stall point, then it's just going to go into a slow rollover thing, and you're going to be baked on the other side. So, just looking at everything against the yen, which is a perspective of at least making it something you can think about without having to torture your mind, unless you're into that stuff. Here's the Australian against the yen. This is 4 hour, and that's my entry here that I would have missed. Is this doji here. So this buy limit here, and then this is itching to, I'd say this has the most, the bigger vacuum to fill. So definitely the Australian to the yen. Looks like we're in a clean house here. Possible kickbacks, so maybe buy limits here, and definitely buy limits as they tried to trap these guys. But that's a 300 pip drop. I don't think that's going to happen. This spread's pretty terrible here, and that's why I just trade dollar. If you're really going against the yen, and you have to figure out, if you're going to put a 50 pip stop on here, maybe a 30 pip spread doesn't bother you, but more like a 75 pip stop. Of course, because if it comes down and news breaks out, this is the closing spread. When the market opens, this should tighten up to about at least 7 pips. But you have to be aware of the fact that at any time the spread could widen on you. So you can't be running a trailing stop too tight on this thing, because you're just going to get bounced out of it, and you're just going to claim, oh, look at, they're coming after me. But this whole craziness here, probably the spreads were wide during this thing, but you were making 300 pips in a week, Here's your, this guy was talking about a tweezers pattern. I haven't heard that in a while. Candlesticks, but yeah, that does happen down here. Some tweezers down here, or whatever we call them. And but the strategy here is to have your orders sitting below this for buy limit entries. So you're entering on the wicks, and look how this thing just topples into that. So yeah, 4 hour setups. Here's a double bottom, becomes this bottom, becomes the retest of this doji. So you have a lot of serious confluence there, and you can just see they're trapping the bears on this one, because they're like, oh yeah, that thing's in a downtrend. I'm getting short here. We're going, yeah, but don't forget, this could be the head, and that could just be a shoulder. So what's the chance of that? Well, and then of course they've already gone long on this thing, and so Australian dollar to me and the New Zealand dollar against the dollar is a buy right now. Of course, you could say, oh, it's still going down, but oh my God, this thing is so, and they've already, I don't know why. I mean, I guess it could keep going down, but I'm looking at the 4 hour here, so I bought this on the 1 hour chart. I went long for this burst, and then I thought, well, this is definitely a good setup, just in terms of setup. On Friday was the trap. They came down and they grabbed this breakout, Williams fractal breakout trap losers. They grabbed them and ripped their head off. They trapped these guys. So I'd buy here on limits, right at the 100-yard line, fair value, back into fair value. So always buying at fair value, either at the market or, I mean, if you're there, if you happen to be there, I would get in on stops, coming out of fair value on stops. So if this is fair value, which it is for this area, when you come back in to fair, buy stops running, plus you've already got your limits. If you're not getting, with the buy stops, you're going to have to come back and place them, because you can't put them until the market goes down. With the limits, you've already just got them sitting there, right? Where all the people think this is uptrend, that's support. And then the same thing here, you have your sell limits up here. I guess you got a little annihilated there, but as you sell limits are sitting at the top of that wick, and they trap them and they rape them. So that goes on over and over again in every one of these markets. And yeah, so it's going to be, market's going to open here pretty soon, and we'll be able to get a better handle of it. I guess we're just going to have to see if we get filled on these orders. But it's pretty much how many orders do you want to place, and can you afford to pay for each order should you get stopped out? Yeah, I guess in the end it's about what you can afford and what you can't afford. But it's certainly fascinating to look at this stuff. Here is the monthly CAD yen, and we're back to fair value again. So yeah, maybe the yen is going to just keep on disintegrating as they lower the yuan, and then their neighbors have to answer by lowering theirs. And we're about to break this. Of course, target on here is outlandish. It's going to be next year way up here. But certainly for position traders, they're going to hold that until, if this is going to be their version of what's the story is going to be. It's going to look like this, and it's going to finally, whatever, and get up here. And, it's always a convoluted path to there, but it can actually, you can say, just like you finally made this target, but in other words, if you bought here, you finally made this target, but how did you like the how did you like the play, Mrs. Lincoln? How did you like the oof? They came back to this doji before they took it up. You always have to look for and of course, this would be the target for the bears is we're going to come revisit this triangle, and guess what, people? There's a big vacuum here that needs to be filled. We're not going up. It's over. It's over for the, and that means that the CAD is going to lose, which I do think the CAD is just, it's in a definitely the huge pivot, and everything's at this borderline now, and gold's been flirting with whatever. And the elections are coming up and all this stuff, so it's a cliche ending to the year. Triangles probably on everything, or ranges and triangles, and the way to play the range and the way to play the triangle. The market's either doing it's either going sideways or it's going up or down. So for the up and down people, the triangle would be the continuation entry for the larger trend, and for the range traders, which is a majority of the market, it's just nothing but inventory order placement for up, down, up, down, up, down. So the fact that this is going, they say it's neither here nor there. It's because it is neither here nor there. It's just all over the map, and it's just very brutal for any, even here, this move here, my God, look at this. Sure, it went up, but you said you run a trailing stop on that? Of course, this is the monthly, but I'm just saying this. I've seen this same thing happen on a 5-minute chart. But look at these monthly wicks, and look at how the closing price. You can see institutionally that they don't run any stops because they rode this whole thing up. So an institutional trader or somebody that doesn't even trade on margin, they're just like, yeah, we're in it, whatever. And sure, yeah, okay, we bought the pullback. We're still in it. And like these market maker wicks don't mean anything to these institutions. They could care less. I mean, they are the bank. So maybe this is the shoulder, this is the head. And so maybe we're going to walk down this thing now, come back and visit this. But I wouldn't care about that. I'm just saying, it's just structurally speaking, you got to see it coming. Or you're going to miss. If you miss that train, you just jump on the next train, which is the beauty of Forex. Is there? Look, you got 22 trains here, and you got. If you decide you're going to trade the 4-hour time frame, then, and you're going to pick just everything against the yen, say, right? Now look at this beautiful stairway here on the dollar yen. It doesn't get any better than this. This is textbook trend trading, and you could say, maybe it's too good to be true. Like maybe this is going to have to come back to say here, or maybe this keeps on and just pops its head above here. We just broke out. It's going to go after these guys, and then that's going to come the rape. Here's where you marry her, you find out she's got a mountain of debt, and she's a psycho killer, and then it comes all the way back to here. Same thing here. Trap them. So a lot of trap and rape coming possibly. And Here's the bottom that became the top, the triangle, whoosh, bam. Uh, wow. But look at this thing. Buy limits. Oof, beautiful. Get the hell out up in here. So sellers come in here, and how did that work out for them? Well, they stalled out in a doji because everybody's like, well, is she or isn't she? Okay, she just married you. They grab the stops here and they rip back. This is 4 hour. So as you can see, the bears have their stops in here. So it's going to be a constant tree trimming rip back. Here too, again, another, it's how you play it, I guess. If you see that this is where they have their stops, here's a great scalp. And the bears have a bunch of cluster of stops up in here. So here is the entry rip back. This spread's kind of wide. Oh, no, this is tight spread. So if you're playing that setup pattern entry, that's how you're getting in. Now the big contention is this bottom the place to sell for one more pullback, or is this the end of the train to the upside? This is done channeling. Yeah, like channeling, right? You're like talking to the dead there. So yeah, okay, come back here, but it really you're gonna be on the 1 hour for your entry, but you can see for the people that have the patience to hold the trade for 20 hours or 8 hours, they're doing pretty good. Here's a nice 4 hour. Probably, if you look left on this thing, there's probably a place way out in the rear there. Just go to the where the hell was I? Okay. I guess as soon as you zoom out one level, it's just a whole different story. So yeah, where does this come in the picture? This very low here. So if you had say there's people stops here, what are they looking at? What is the position trader thinking? You need to get inside the head of these position traders to some degree, or the swing traders. But swing trading entries are typically where you're right at the edge of the market, and everybody's like they're cheering the football player across the gridiron. Yeah, go for it, And all the cheerleaders, all the people that are committed to a trend and committed to a projection point and a target. Target's not being met, time to close down shop. So zoom out one level, and this is how you're looking at it without overcomplicating. You're going to look for where that comes in the big picture, and it's like right at this doji, if you can imagine. Anytime you see a small zigzag, just think doji. And here is a big triple top support that goes back to here. But I think the key is that they had to grab these stops. So when you're plunging into this territory, you need to be gobbling that up. It's a structural entry thing you have to think about because there's so much money there. It's ridiculous. Like this thing here. And of course, if you believe in fractals, then they hold true for even the bear trap fractal and the bull trap fractal, because you can see it here. Oh, it's just going to go on an insane zooming. This is a 100-yard line. Wow. I mean, it almost came down. I mean, some guys got to stop in there. They got this guy's stop, and look what they did to him. He's long this thing. Don't forget, he's long from, say, here. He ran a trailing stop. He never took anything off the table here, which I can't understand. I'm just talking about a bad trader. Like, I'm talking about how most people are going to be frustrated by a trend trader. Be frustrated. Didn't get out here. He tightened up his stop to here because, or he maybe even tightened it up to here because he's looking, yeah, this is the consolidation. We're going to go making higher highs. And his target's here. There comes a point in time when we've just got to invite too many people to the concert and have them die trying to get into the concert. And that's going to happen, this backup. One guy stops to, if some hot chick was changing her tire on the side of the road, it'd be a problem. I could see almost a traffic backup based on that alone. And that's almost like say a piece of news that comes out and people have to chew on that for a while. Not that you would chew on this girl on the side of the road, but maybe you would. If you're one of these Dahmer types, you kill the person, you put them in the fridge, and you just kind of like entertain yourself as a cannibalist for the weekend. Maybe not everybody. Maybe I'm the only one. But yeah, so it's. But here's the guppy. Now here's the famous guppy. What the hell, right? Stupid entries on this. More triangulation entries. Triangular ridges actually are very prominent in nature. So it's not unusual to see a triangle or a wedge. This is how these critters get into little nooks and crannies. And so this is just, if you think Fibonacci is natural, then you're always seeing and here's the wicked wick of the, for the stop out. But that's your, you really got to be thinking a little bit ahead. Here's the weekly. So we're going up. Well, hell yeah, I guess. But, a little rocky road again. The guppy entries were certainly back here for this amazing ride and the crush through of all of the stop out. But look how the pulls back right on close on the weekly. Get in here, but oopsie daisy. I guess hopefully it closed at the end of the week there, and it didn't. So yeah, if you got it at the end of the week, you had a pretty wide stop on that puppy. But here was the entry, obviously, to have a buy limit. If you miss this giant move and you feel like you missed out, well, you could get back in here. So that was the big pivot entry. But here, there could be a big problem because as this thing comes up into here, sellers are coming in. Is this going to be the point when this thing finally rolls over? I guess you don't care unless you like to look out in the future, which that's kind of entertaining, but I guess I wouldn't put too much weight on it as far as like this broker, they doesn't go back, but I'm sure there's some resistance up in here. And, on the monthly, it's not a lot of entries, but wow, what amazing structural entries here. Wouldn't get filled if you had your limits here, but here's a great triangle. But here's how a triangle can resolve in a terrible way where you get long, and what do? They come back and grab your stops. Then they really go up. So that's always a problem for money management or just psychologically being punished. You're right. This is the thing about being right and making money. Big differential there, because you can be right about these market moves and just completely get crushed. Like I knew it was going down, but damn it, look at this wick here. I called my broker about this. I told him I sold here and everything was great. I tightened up my stop and I was like, damn, I was so up on that trade. Damn it. And then I sold again. And I did what you're supposed to do. I ran a trailing stop. They stopped me out, and I missed out on this giant move. Well, I think that becomes a point of like, if this top is a bottom, it's more like, how did you get in the trade? More than, it's a lot more almost how you got in and how big you got in than really anything else. If this is the resistance area, and you're just going to trade that for like, 3 weeks down. So coming into the opening here, looking at all the pairs on a 4-hour basis, and not looking back too far data-wise, because you're really just trading setups in the end. It's wonderful to look back and think about all those great entries, but unfortunately you're only standing in front of next week. So what is the trade coming into the I don't think I have a I wish I had an EA that would switch all these to 4 hours for me, but I don't, so I have to suffer the manual labor costs here. And okay, so that's set, and let me just so yeah, the market opens up here in 5 hours, and this is the 4-hour chart. So first 5 hours into the market. So 4-hour chart. 4-hour chart's the story, because that's what the big boys trade. That's what I heard. So everything's on the 4-hour here. Let me turn this chart shift off, and then let me just set this delete all objects here. This is my of course this only takes me through 7 pairs. There you go. Let me zoom back into normal period count to here. So yeah, what is the trade coming in to the open? And it's really going to be a standpoint of, I don't really want to get on stops, to be honest, but certainly limit-wise, you have to go with this right out of the gate. I'm going to try this on this demo account. It's just placing in buy limits at structure points. Let's see how that plays out. Of course, I'm going to run a pretty generous stop on this stuff, and maybe 50 pips stop on the 4 hours. Look to make 100 pips. And then a 50 pip and a 30 pip stop maybe, and then take profits at, say, the 30 pip stop's going to have a 50 take profit, maybe a 60, stuff like that. Maybe keep it down to like 10 drops, and put them on every currency pair. See what happens. Just test out the theory, and they could last for 4 hours, I suppose. I guess ideally 4, 8, maybe 12 hours. Don't get filled. I guess stop entries would be valid if the market opens and it's quiet. Maybe put some buy stops in to go with the trend. I think all stop entries are going to be trend entries, or just a breakout scalp, and then the other stuff would be you're looking to have limit scalps, and I think all the limits are really retracements. They could be trend trades if you held them long enough, but it's really about taking advantage of that vacuum that's been forming, and then after it fills and it's done filling like it did here. So obviously buy limit here. I guess you have to buy limit's got to be really deep here. Maybe some buy stops here. I hate to chase stuff, but I guess buy stop there, right? So buy limit there, buy stop there, buy stop there, buy limit there. But see this wonderful gap, you're not going to buy this as it plunges. You're just going to wait for that to fill that void, and then you're going to make your money on the way back into the void. Here, buy limits, you can't put buy stops because you already missed the breakout. Here, buy limits back at fair value. Here you could put a buy stop maybe because you've pulled back. Here you can't, well, I guess a buy stop on that. But definitely your buy limits have to be below, it's off the chart here. Here, sell limits up in here, because you're going to come back into this previous, and there's really not much you can do here. Maybe a sell stop, just go with the flow, and buy stops here, I suppose. So you would actually buy stops here. You're going to come in here, and then you're going to sell for the ride back. Here on the guppy would be buy limits below, it's off the chart here, but buy limits below here. And some buy stops on this fractal because you've got your first kind of rollover. You're not going to get in unless it goes up. Here's a beautiful triangle. Buy stops, but realizing we could still come back to here. Here, it almost looks like just buy at the market on the open with a buy stop because you're right at fair value. Here, buy stops, but buy limits like insane deep. Because it looks like the pound could get crushed by the Australian dollar. The way the Australian dollar is about to, in my opinion, go up and take out this fractal, and we're right at fair value here, so you're buying Australian on the open. Here you're buying Australian on the open nearly. Buy stops above, but always a buy limit on the possible rape. The Australian to the dollar is already broken out, so I went long on this top bottom here for that ride, but I took everything off. But I would buy if it came back into this. I'd actually put a buy limit at that pivot and just always buy limits super deep. We broke out here. So this was my big winning trade on Friday because I had the triangle and we were in an uptrend, so on the smaller time frames, there was a killer entry. The New Zealand was a buy too. New Zealand would be a buy stop entry here, but I think they're still going to have to do the breakout pullback to fair value. But being long the Australian dollar, if you're already long the Australian dollar, you're looking to get back on pullbacks here. Now the dollar to the pound to the dollar, buy limit for a scalp at the apex of that triangle, and a buy stop here. But they could still come back and want to retest this apex of that. Dollar yen, obviously buy stops and then a buy limits down here. But this looks like a triangle. And buy limits here, I suppose, if you want to aggressively scalp up into this. Well, this dollar Swiss looks like we're just going to go through the floor, so I guess sell stops if you really want to be a high-risk trader. Put protection here, but that looks like it's going through the floor. Dollar CAD looks like, yeah, everybody's getting on this bull train, but man, I mean, how much longer? Of course, this was the entry here. You'd maybe buy in the market here and take something on a ride to the retest and hold maybe for the breakout. Maybe it does have to, dollar CAD has to still march north because it isn't a trend. If you hate trends, then you're definitely disappointed that it's not going to sell off. And here was the buy limit entries here. You missed that, then I don't know. Guess maybe buy. It's quiet, so you can buy at the market. The Euro CAD looks like the CAD's going to get annihilated again coming into the opening. If you didn't get in on this breakout here, then I will certainly would chase it. But it's going to time to think about selling, putting sell limits out in outer space on the north side of the CAD pairs just to trade the insane irrational exuberance against the CAD, and then CAD to the yen is, but it's hard to, I don't want to get too, because the problem is this is the leading currency, so you have to think upside down, which I don't want to go there. Like this was the top that became the bottom here. So if you're, the Australian's going to kill the CAD. This looks like the most bullish thing going on right now. So it's kind of like this hot potato game, I suppose. I mean, as they kill the CAD here and the Australian starts to lead all the currencies even against the New Zealand, what's going to happen, Australia is going to kill against the yen, that at some point the dollar is going to start losing, and then it's going to look like, okay, time to sell this. But it would keep it, you know, if you have another broker that you can donate just a demo account to everything against the CAD, so you can see prospectively which one's the best train to jump on. But yeah, that's the kind of blockhead opening strategy for coming into tonight's open. And if you're a 4 hour trader, you're going to have to wait maybe for 2 to 4 to 6 to 8 hours to 12 hours for your orders to get filled, or to see, do you want to start tightening up your stops for the volatility breakout in an uptrend or a downtrend? Like here, you might want to wait for it to get quiet, or you have sell limits sitting at the dollar Swiss here to get picked up on the south train. But that's all I can think of. Anyways, here, I can see buy limits here, but it's going to be, if you were to trade 22 pairs like that, it's like, hey, maybe you got your orders sitting there for 8 hours and they disappear, no fills. Come back in with the same order at the same point, and maybe the market's moved in a position where you can see it's never going to make it to that limit anyways. That's why you never got filled. You can tighten up your orders. So you have to kind of go with the terrain that's being dealt you. It's like a high-speed chase, I guess, in a car. You don't know what's over the hill if you've never been down that road. But you do have your kind of like, what do I do when I see a pothole? Do I swerve or do I punch the brakes? Knowing what you would do I put a limit or a stop in? It's kind of like, like if you're in the snow and the car starts to go out of control, you don't necessarily want to lock up the brakes. You may have to countersteer until the car straightens out, and then determine whether you want to put any pressure on the tires. Because in a, say you're driving the car, I guess the analogy is you're trading, you're driving the car. If you go onto an icy surface, maybe you're on stop entry. In other words, you're letting the market you're waiting for the momentum to die out in the drama that you're caught in. But the limit order strategy is that you have haystacks out there to grab you, because you were so bright enough to put out. You knew it was going to be icy that night, so on the worst curves in the road, you had placed haystacks knowing that you were going to bury yourself into these things. And that saves your life. Plus, you can get back on the track and get back in the race because your car's not damaged. But, if you're a stop entry trader, you're just going with market flow, and you're saying, I don't know how many more 360s I have to do before I can get back. Of course, you're going to get annihilated. Or in other words, when you go off the road, and you have no haystack there, you're saying, I'm going to put in a stop, which means I'm just not going to be in the car. I'm going to put airbags in my car, so I'm going to put that stop tight. I'm not counting on the haystack because I'm trading a different risk management style. And the thing is, I think volatility is going to be a factor unless you're scalping, like the market's exploding up and you're putting sell stops below and they pull you back, and sure, you scalp something. In the end, it's really going up. You don't get dragged into a position on stops and be trapped like a bull or a bear trap. It's always a problem for thinking that you have a system that, and of course, it's all based on the fact that you are trading it the way it should be traded, and you're not over trading and all those other things that could totally wipe you out, even if you're totally following all these rules. And so if you're fine-tuning your rules, you're changing strategies, or you're thinking, it's just not making enough money, and I'm looking back at my charts thinking, well, why didn't it get in there? Hindsight is more than 2020. It's the cruel. In other words, if you look back at the 5 people you married and divorced and had a murder because you couldn't even get out of it. Like, you divorced them and it wasn't enough, so you went back and killed them. That, in hindsight, you'd say, maybe I would have done that differently. So you could say the same thing about any chart you look at, and there's the same amount of financial exposure and remorse, I suppose, in a marriage as there is in a trade. And if you get married to a trade, or if you're a person that you're like thinking of an investing standpoint of like, no, I'm in this fundamentally, I'm right, and I know I'm right about this trade, damn it. I know I'm right, and maybe you are in light enough of a position that it's not affecting you psychologically to be underwater for 3 hours or 3 years in a trade. It doesn't bother you. I guess there's other things in your life that, and trading's not everything, but it's definitely a place to make piles of money. Um, and with just a couple basic rules in mind, you don't need to have an elaborate trading system, although there are elaborate. It's just funny how there's no end to the amount of people that want to um, create a system that is like this is the system. Um, I think if you're thinking more abstractly, it is true there is the system. In an abstract conceptual sense, if all you said was buy low, sell high, and it sounds really kind of childish to say that, but with the proper stop um, sizing to the time frame you're in, that works all day long. And it also works to buy high and sell higher. Now that would be the turtle trading concept of trading. And the same thing would hold true, risk reward ratios staying in your favor. That works all day. And at that point, it just becomes, well, you can't, you still couldn't overtrade those situations. In other words, you'd be forcing the trade. You can't force the trade because you just disqualified the whole idea of you just blew up you just canceled out your strategy. Because your strategy was based on volatility breakout, means you have to wait for the market to calm down. And so there you have the issue of if you're overexcited about a trade and you traded enough, you can see it coming. You just go a little too heavy on that one, and you get stopped out, and that can just keep you out of the game psychologically, not financially. Maybe your stop wasn't that bad, but you just say, I thought that was like the best setup out of all these pairs, and so you're kind of for the person that's over planned a trade, I guess you'd say, there's not only over trading, I think there's over planning. You can't foresee. Every time I go to the store, I come across. I live in a place where people don't seem to, since there's no police here, people don't seem to want to. When they see a red light on a side street that's on a deserted road, they ignore it. But I don't, just because I guess I'm still not turned over into the psychopathic driving technique. So I actually stop at the red light, and people go around me or they honk at me like as soon as it turns green, I mean, I had two people go around me the other day because they must have known each other. Like they were like, "He's stopping at a red light. What an idiot!" There's no cops in this town, um, but it's just funny because it was kind of disturbing from the standpoint of um, if we don't kind of keep some kind of order here, people, we can't just ignore every red light because some guy may be doing 110 and he can see that it's green. He's counting on it being green. He's going the other way. But anyways, I guess getting sidetracked there from trying to make money. But I think in the end, it's really about how fast are you going would be how big are you trading in the car analogy, and do you have an airbag? Now, for Bill Williams, who I'm always making fun of, he does have an airbag entry technique, and he's right about that. That if it's not going up, then it's probably going down, and you think you're right, but your wrong strategy may make more money for you. Now, that's very disturbing from a logical standpoint because now you're stuck with the problem of you made more money being wrong than being right, and you're in total conflict with the skills you use to survive the rest of your life, which would be stopping at red lights, which means I put my stop in there after I got in the trade, and I'm a breakout trader, and that's all there is to it. and I drive a Porsche, or I drive an SUV. So the rules for my driving are, my SUV I can go off road, Porsche I can't. But in the market, you can have a Porsche, an SUV. You can have all these different. You can have a Sherman tank, I suppose, and all these things that you implement as need be. And so having a library of trade plans or strategies, and you only need three, really, I think. I mean, you're either getting at the market, getting in a stop, or you're getting a limit. So those three, or you're long short. So it's like a Boolean thing, right? You have six possibilities in the end. And so if that's your starting point, then that's all about. Next question is what time frame for these entries, and structurally, how does it look? Does it make sense for the time frame you're in for that strategy? So, you can slice it down. You can trade these strategies on a 5-minute chart, but your target's going to be like 8 pips versus 5 pips, and you can't place those orders all day long. It's like ordering. It's like owning a coffee shop is to owning a car dealership. Car dealership, you're selling really $80,000 cars to make $20,000 profit, and that's a position or that's a standard lot trade, say. And or you just own a coffee shop and you sit there and just pick up pips along the way. So it really depends on your lifestyle, I think. So if you're say on the 15-minute chart, there's a lot of 45-minute great trades to make 10, 20, whatever pips, 40 pips, 50 pips. And those setups actually in the 15-minute chart I find to be better to trade if you're a full-time trader, because you got plenty of time to draw a trend line on a 15-minute chart and have it come out, have that setup perform within an hour and a half and make money. These are the considerations, I think, to maximize. Now, on the 4-hour chart here, certainly for the people that have a day job, it's totally viable to place orders that last every day, 24 hours. If you go away for 8-hour gig, you put a 12-hour and an 8-hour order in there. So you go off to work, you put your orders in, and pretty much set it and forget it trading. I mean, certainly that if you were babysitting the market, you would probably see all your indicators line up at that same price anyways. And I have no doubt that all the pivots that you see structurally are also Fibonacci's, but without being redundant, without stacking up. I mean, this is kind of like an insecurity issue. It's like the girl that's hot looking puts on makeup and actually ends up looking like a clown. Like, she was so hot that she went too far. She got big eyelashes, fake breastises. She just screwed herself to the wall. Now she looks like a tramp. Maybe she's even stripping, right? And for all the genuine guys that would want to date her, they just go, I would just rent a girl like that. I mean, what you've done to yourself is you're basically put yourself on the market. And so a genuine woman that's a human being, she knows she's a woman, but she's still a human being. She's not like sold into the fashion world of having a brand. I guess some guy wrote a book called Branding. I mean, people have brand names on them. They got tattoos now. That's a new version of branding, I suppose. But no offense to all you people with giant eagles on your back, but at some point, people can overdo anything. I guess that's my point. So, yeah, just like but I think you could, on a demo account, see the demo account is the rent-a-babe. That you can actually, more like a rent-a-robot, you can just abuse that and you can just not feel guilty. And you can test out your strategy on that stuff. And, but yeah, you can totally make piles of money trading, absolutely, if you've got, the patience to, I hate to say patience, because if you don't have them, you don't even want to hear that word, right? I mean, the problem is it's a trigger. And like, say you're trying to lose weight, You think of diet, you think about denying yourself all these wonderful foods and all this entertainment food. Problem there is that as soon as you bring that up, you brought the elephant into the room. So you're really psychologically caught in a paradox there. Same thing in trading. You know the idea that you're going to make money. It's more like how much am I going to risk? If you're always focusing on your risk levels of okay, this trade's going to cost me $30, and I may not make one bit of money. So if you take all your losses up front like a samurai, you're just like, you know what, I could die. Now you're relaxed. Now you can kill the guy, right? Because you have nothing invested in this thing. That's the threshold of um, this is I guess this is the old supposed Jesus quote is you're in the world but not of it. So you're yeah, I got trade out there, but I could care less. Well, how can you not care? That's the question. How can you not care? Well, you just have to be carefree but not careless. That would be the Mark Douglas quote. And I think that in a nutshell, without having a million cliches and all these things sound great, right? And people say, yeah, easier said than done. No doubt, easier, but it's also easier done than said in the market because I could pull the trigger at any moment, buy at the market on a whim. And I know traders that do this. They're like, I think I'm just going to go short this thing. I'm like, okay, well, if it's a scalp, I get it. But if it's a swing trade or a position trade, you're kidding me, right? Like, why? If you want to do that 1 minute chart gig, just go to the euro dollar. There's always a buy and sell on the 1 minute euro dollar without regard to whether or not the world's coming unwrapped. And so that's the way I'm looking at it. But anyway, that's my 5 cents. I guess I went past my 2 cent limit there.